Hello, my name is Andy Collier, and I work at the CFO Centre, where we provide fractional CFO support. During our recent conversations with business owners, we're hearing an awful lot of worry and concern about the impending increases in national insurance. I have one of our CFOs, Andrew Jones, here with me today to explain what he's seeing with his clients and how they are dealing with it together. Welcome, Andrew. Would you just give us a little bit of background about yourself, please?
Hi, Andy. Hi, everybody. My name is Andrew Jones. I've worked with the CFO Centre for the last 2.5 years. Prior to that, I've got nearly 30 years experience in the finance sector, of which the last 15 has been spent at a finance director or CFO level in multiple organisations. They've included a top 10 global US-owned business and a SME, which was the fastest growing haulage company in UK history. So I've got a nice varied background.
Fabulous. So, Andrew, just how worried do you think business owners are about these forthcoming increases in national insurance?
I don't think a lot of business owners are worried enough. I think there was a lot of publicity at the time when the national insurance increases were announced, but I then think it's gone very quiet. If you're liking it to when the pension scheme auto enrolment was rolled out, there was a lot more publicity around those changes. I think a lot of businesses are going to get a big surprise when they run their payroll in April and when they've got their HMRC payment due in May. So I don't think enough businesses are prepared and fully understand the cost of the changes.
That's interesting because it's fast approaching, of course, as well, isn't it? Do you think this particular increase is any different from any other cost increase that a business would come across?
Yes, I do. I think in the course of most businesses, a normal cost increase from a supplier is one supplier increasing the cost to your wants, and businesses have a number of different options to look at. They can accept it. They can pass it on. That cost increase may only be a fraction of their total cost base, so the impact is negligible. Or they can look for a different supplier and a different provider of those goods and services. In this case, there is no option. There's no option to go elsewhere. There's no option to avoid it. It's simply a cost that has to be borne by the business.
Okay, so let's get into a little bit of detail. So as a CFO, a Chief Financial Officer, what can you do to help specifically?
First thing is start giving the business owners options. Business owners always operate better when they've got options and they can understand the impact of what they can and can't do. So I'd always start off. First point is, can we pass on the cost increase to our customers and our client base? That is a whole myriad of conversations. So most businesses and most business owners understand the optimum pricing point for their goods and services. So putting an additional increase on them may not be the option to go. It can lead to losing clients, losing customers. But again, even that way, if you increase your cost by 5%, you lose 5% of your customer base. You've got the same revenue, but only 95% of your costs. So understanding the impact of all those measurements is key. Alternatively, the other option is always to look at cutting costs. But again, in this situation, particularly if your supply chain is predominantly UK based, not only are you not going to be able to cut costs, you're going to be facing increased pressure from costs going up internally as well. So that option is very challenging as well. The reality is most businesses end up somewhere between those two options. Yeah. It's not a one-stop fit all. The other side of things is businesses are saying they can't increase costs, they can't increase revenue, they're struggling to manage costs. So they've simply got to understand how to minimize the impact of this increase and what can they do to mitigate the impact rather than avoid it completely.
Yeah. When you talk to somebody about this for the first time, have you got a particular process for helping a business with this type of issue?
Yeah, I think it's always helpful to quantify it. So to talk through business owners, the value per person, the increase per person, what that is to their cost base, and then obviously by the number of employees, what the total impact is. It really hammers home what this national insurance increase is going to do to their bottom line. Until then, it's stuff in the press, it's sound bites. Until they really understand the financial impact on their business, it's very hard for them to understand the tangible impact it's going to have.
Yeah. You mentioned reducing costs. That's clearly one way to have a look at it, and it's probably the more usual knee-jerk reaction, really, in a bit of a sort of panic. Let's just cut costs. But are you finding there are more inventive ways to deal with this type of issue?
Yeah, so a number of employers are now looking at different options. So where they've got budgets, forecasts, 3 years, 5 years, etc. One option is to simply take the lump sum that had been allocated towards pay increases and just accept that that's being covered by the tax increase. That has significant impacts on employees. If there's no pay award this year for employees, then it's going to increase it's going to destroy your staff retention and increase your attrition. So a number of my clients are looking at what they term as cost-effective alternatives. So these are things like healthcare cash plans. They're things like retail discount schemes. They are salary sacrifice schemes, doctor on-call services. So rather than financial benefits to the employees, they're looking at the overall package. And again, these are fairly cost-effective ways to give a big list of benefits. Some things such as a doctor on-call service. Lots of people are having trouble with the NHS. If the employer can give a doctor on-call service with a guaranteed phone call, health plans, retail discount schemes, reduced cinema tickets, reduction with supermarket spend, all of this improves the employee's mental health and equally the financial health. And they can give up to £1,000, £2,000 worth of benefits to the employee. Other options that employers are looking at is the way the national insurance increase is applied. If you've got 2 part-time employees, then you're getting hit twice. So rather than having 2 part-time employees, 1 full-time employee has less national insurance costs for the business. So there's a real risk that these changes could have a massive impact on the part-time workforce and the part-time pool of employees.
Yes, that's interesting. So I mean, you mentioned salary sacrifice. That's been a term that's been coming increasingly sort of more widely known, really. So this is a really good example of how this could work, mitigate some of these issues. But I guess the real thing you mentioned there, as well as dealing with the cost increase, you're also potentially increasing staff loyalty and staff retention, which, as we know these days, is a hard thing to hold on to, isn't it?
Yeah, it is. And again, it's not an ideal scenario. There is no 3%, 5% increase for employees, but there is a list of benefits that the employer can position as giving them a much more rounded benefits package. So again, a number of my clients are going down that route and are seeing salary sacrifice as a real option now, where they've kind of shied away from it previously.
Yes, brilliant. Historically, as you said, most people look at how to deal with the cost increase, but you did touch on potentially actually increasing the company's own prices to deal with that, to pass it on, if you like. I think, in my experience, business owners have often shied away a little bit from increasing prices, and you alluded to it, really. But there's a sort of mystique about, well, if I put this price up, I might lose this and this. How do you deal with that particular aspect, helping companies managing their pricing structure?
Yeah, probably in a perverse way. In my previous role in the transport sector, it was very much a race to the bottom. The cheapest would win contracts, etc. But that's very short term view across the whole sector. If companies aren't there competing and companies aren't profitable, they're not going to be there in the future. So it cuts down the pool in the future. I think in terms of applying cost increases, it's almost seen as a last resort in a lot of companies. I think across the UK, there is an understanding of this increased cost that all the businesses are going to be paying, and I think that it's very, very difficult for some sectors to avoid passing those costs on to customers and consumers. I think it's a lot harder in the B2C sector, where your pricing is very much seen by the direct customer base. I think when it's B2B and it's effectively hidden a little bit and it's one of a number of supply chains, it's potentially easier to put them costs up.
Yeah, brilliant. Well, look, thanks for your time today, Andrew. And what I've heard certainly as it's coming fairly soon. So don't be surprised by these things. But don't panic either. There are people you can talk to and explore it further. If you would like to talk to anyone someone about your concerns with national insurance or indeed any other business issue, please say hello on our website and arrange an introductory call. We just love helping people achieve what really matters to them, but also dealing with what really worries them. And this is clearly one of those areas. You can find us here. Thanks again, Andrew, and thank you for listening.